Welcome back to Wall Street Confidential. The traditional ways of doing your investment homework might be going out the window. And Jim, you wrote a really interesting article here for Real Money about what are the new variables that we should be considering. A lot of people looking at cyclical versus secular growth. Can we do that anymore in this environment?
I think that what happens is that when you get the animal spirits going in a market, when people feel that the worst is over, like we felt in the unemployment number, they come out of the woodwork and they start buying. And we're having a Santa Claus rally, which is totally understandable. What's not seen is the stress in the credit markets, that you don't have, there's no lending going on. It's impossible to refinance. There's no, what I regard as being liquidity yet in major products, whether it be commercial real estate or whether it be building infrastructure without the government's help. Almost all the money that's being pumped in the system is by the government, and there's no private investment here going on whatsoever. And so you've got this dichotomy where it looks like things are really good on the surface, but the market that's smarter, the bond market, tells you we're in big trouble. Now, what I like to look at, and my friend Doug Cass has been really good on this, is you'll get these periods where there's just no rhyme or reason to the two markets, that the bond market will be horrible and the stock market will be great. The bond market always in the end wins, so I'm very suspicious of any long-term rally. But at the same time, I'm playing it. I mean, I think, we just bought some stuff for ActionAlertsPlus.com. We've been buyer all last week. We feel strongly that there's a tradable rally into the year end. But I just want to be mindful that if I bothered to look at the balance sheets of some of the stocks that are moving up, I think I would be perturbed and not want to do it. And
some of the balance sheets specifically, you talk about Macy's, Liz Claiborne. There's a bearish stance with these stocks, but maybe it's not founded.
Well, you see, you don't know. I mean, the stocks are moving up. The bonds are not. Okay, so that's kind of what's happening is that the stocks are reflecting a better Christmas, and the bonds aren't reflecting anything other than bankruptcy. And when you have that problem where there's debt that needs to be refinanced in 2009, as those do, it doesn't seem like anyone's stepping up to offer them money. But the stocks can rally because they've been oversold. I mean, like J.Crew went to 9, that doesn't have a debt problem. Then went to 13. I mean, I think that's reasonable to expect when it turns out that Christmas isn't that bad. But what I look for is some confirmation in the bond market that things are better. I'm not getting it yet.
All right, and we're going to actually do another video here with those trades that you're making in Action Alerts Plus. Thanks so much. You're watching Wall Street Confidential. Stay tuned.